What's up, everybody? This is Chris Sherman. I'm bringing you a moving average convergence divergence, aka the MACD. I'm bringing you a video, and a very informative video on how we can utilize the MACD as traders. And then I'm going to make additional videos that I'm going to upload to ECA guys. That's going to be how we can utilize the MACD as binary options traders. Okay, so let's understand what the MACD is, and based right from Investopedia, I'm going to read you guys the definition of the MACD. Now, the MACD is moving average convergence divergence. It is a trend following momentum indicator that shows the relationship between two exponential moving averages of a security's price. The MACD line is calculated by subtraction the 26 period EMA from the 12 period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD line is called the signal line, which is then plotted on top of the MACD line, which can function as a trigger for potential buy or sell signals. Traders may then buy the security when the MACD line crosses above the signal line and sell or short the security when the MACD crosses below the signal line. MACD indicators can be interpreted in several ways, but the more common methods are going to be the crossovers and the divergences, also rapid rises and falls. Now, some key takeaways that I want you guys to note. The moving average convergent divergent, the MACD, line is calculated by subtracting the 12/6 period exponential moving average from the 12 period EMA. The signal line is a 9 period EMA of the MACD line. The MACD is used best with the daily periods where the traditional settings of 26, 12, and 9, which is standard. And then MACD triggers technical signals when the MACD line crosses above the signal line to buy or falls below it to sell. The MACD can help gauge whether a security is overbought or oversold, alerting traders to the strength of a directional move and warning of a potential price reversal. The MACD can also alert investors to bullish and bearish divergences when a new high in price is not confirmed but a new high in the MACD is, and vice versa, suggesting a potential failure or a potential reversal. After a signal line crossover, it is recommended to wait for 3 or 4 days to confirm that it's not a false move. Now, this is where I want you guys to pay attention. This is if you're using standard settings and you're trading as recommended on the daily time frame. So that would be your forex traders, that would be your swing traders. So let's look at it as that tool. Now, the cool thing about the MACD is it has the MACD, which we're going to be talking about today, and then the histogram, which we're going to get in a little bit today and then more in depth in the future. Now, when you utilize the two together, you have a dual threat tool. Okay, you have multiple confirmations that you can utilize from one tool that's giving potentially two different signals. Now, with that said, let's take a look. What do I mean by that? So, again, the settings are 12, 26, and 9, and the MACD line is going to be shown in blue. The signal line is going to be shown in pink here. So when the MACD line crosses to the upside, we could potentially be looking for buys, and when the MACD line crosses the downside of the signal line, we could be looking for sells. Two things I'd like you to take note right off the top. It is a trend following indicator. It is a trend following tool. So if you can identify that you are in a downtrend, as we can clearly see, we are in a downtrend here where price has failed to create a high. So we've created a lower high and price did create a lower low. Price created a lower low from this area here. Okay, so boom, identified a downtrend was forming. Now we can wait for confirmation. What other confirmation are we looking for? Well, if we get the MACD line to cross the signal line to the downside, that would be a confirmation, wouldn't it? Well, we got a confirmation here. when the MACD crossed the signal line. Now, when we look at this area, let's take a look at the histogram. Now, the histogram is the graph in the back. Now, the histogram is going to show strength and momentum, okay? Strength in the move. So, as we can see here, right here, we'll start from here. This is the final strong red candle in this down move. Then we start to see some pinkish colors forming. And the candle size not only has it turned pink, but we can notice that each candle on the histogram is starting to get smaller and smaller, right? Would you agree? We have the strength and momentum getting stronger to the downside, and then it abruptly halts right here. The very next candle, although this candle in price action was printed green, the histogram shows it still has some potential bearish momentum. This is where you're starting to say, okay, we could possibly be changing a directional move, right? Price could start to be potentially going to the upside. As we see, price did go to the upside, right? And we get the cross up here. Right here. And the price went up one, maybe two candles. And then what happened? Price action started rejecting at this previous resistance. It's very clear the histogram is not creating any higher highs here, right? We have one candle bigger than this candle, then this candle is bigger than this candle, and then this candle is the same or a little bit smaller than this candle. So it's telling us right here. So if you would have entered a buy off of this cross up, it's telling you when you're slight in profit right here, hey, this trend, this is not strong. You might want to exit the trade and wait for a stronger confirmation. So we get out the trade if you took it. But again, we noticed that we were looking for sells, so you might not have even bought this. But we didn't get the sell confirmation until over here, right? So now price breaks structure and creates a lower low. This is our first indication over here that price is starting to turn bearish. However, we had a heads up over here that price was starting to turn bearish. And I'm going to show you right from right here. We started getting a heads up all the way back here that price potentially was going to turn bearish, and we didn't get confirmation until here. Now, what do I mean? I'm going to show you. The histogram here, each candle in the histogram is less stronger and gets weaker and weaker and weaker and smaller until it starts to change bearish. As it starts to change bearish and turn red, we notice that we have a full red, which is consistent with strength. Each red candle is getting stronger in the histogram. So with the confirmation of the MACD crossing the signal line, with the confirmation of the histogram getting stronger, having a show of strength and momentum to the downside, you may, as a trader, be able to enter much earlier than the typical entry because you're using additional confluences before they happen. You're using the MACD line. The MACD signaled that this down move was occurring before it happened. Okay? So you can start looking for potential better entries. Now, boom. We broke structure, created a low. Price comes back up, retests this breakout, fails to create a high. So we know at this point that we're still in the downtrend. Now what are we waiting for? Maybe we're waiting for additional confirmation to take a second entry. Well, kind of similar things happen here. We have price action give us a engulfing candle. At the same time, the histogram starts to turn bearish. This could have been your signal to get in. Maybe you got in after the bearish engulfing candle with the confirmation of the histogram. Maybe you wanted 3 confirmations and you waited for the cross of the MACD line. So you waited to here. But ladies and gentlemen, even if you got in here and your stop loss is obviously going to be this previous high. So even if you got in here, so your stop loss would be 318 pips. Let's see the drop. At here, you're at 445, so that's one and a half. At here, you're at 536 pips in profit, so that's almost a 2-to-1 risk to reward. Let's see if price continues to drop. So you are trailing your trade, and now you're well 842 pips in profit, and you got the confirmation. The first confirmation you got way back here because you had the histogram turning bearish, the MACD line crossing the signal line to the downside. That was your first confirmation. Then your second confirmation came in over here. So if you entered from here down, you're talking 1200 plus pips. If you entered on this confirmation down, actually this price pushed up first, so let's go right to it. Down, you're talking 950 pips. So that's a 3-to-1. Now, you can continue to trail your stop loss as price creates lower lows and lower highs. We will identify this area, and if price comes back to this area in the future and breaks it, it'll take us out of the trade because this is where our stop loss is. So you got stopped out 850 pips in profit. If you're trading this Forex, guys, if you're trading binary options, you know 850 pips is a lot of pipettes, a lot of binary points, right? So this is how we can utilize the histogram and the MACD lines as potential signals while we're trading in a trending market. Now, again, it's recommended to utilize best on the daily time frame, but let's see what happens on the shorter time frames. We're going to notice similar, right? Let's get rid of this. Look at this. We got the histogram was turning bearish. Then we get the MACD to cross the signal line here. And even if you just took it back to support, 100 pips, this support 124, there's still room to trade, to be able to profit in these markets when you're getting moves like this, right? So if we go to 5-minute, it's going to be the same thing. But again, we're going to change up the settings when we get to the 5-minute time frame and lower time frames. But is using this as a additional confirmation, additional confluence, maybe you should be entering or maybe you shouldn't be entering a trade. Here, we can see a couple things I want to share with you about the MACD and the signal line is when the MACD line crosses the signal line to the upside or to the downside, whenever there is room between the MACD and the signal line, that shows you that there's potential strength in that move. And then we start to see this strength here by the MACD pulling away from the signal line. So that could have been our confirmation that we should have been entering buys. And then the histogram follows with strength and momentum. Each candle gets bigger and bigger, 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 and then it flashed a light green histogram candle on the histogram right here, which would have been our confirmation if we're trading, binary options. Okay, maybe we want to hold off on buying, wait for better confirmation. But when you're trading, Forex, you want to make sure that you're looking at the higher time frames and in respect to the MACD, because you're using the settings best for the daily time frame, if that makes sense. So again, I'm going to show you guys how to utilize the MACD and how to utilize the histogram on lower time frames. I just wanted to get a basic understanding of the MACD and share with you guys how the MACD formulation is figured out. So that way, and understanding what you can utilize the MACD and the histogram for, you can, it's a clear indication of when potential the trend is going to change. So for example, here we had the histogram turning bearish, 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 or bullish, bullish, bullish. We had like a die out in price momentum, and what happened? It consolidated, consolidated, and it didn't turn bullish. It signaled a strong red, so that would have been confirmation. Okay, we should not be looking to buy, just hold off. And we didn't get the MACD to cross up either, so the MACD didn't cross the signal line until here, and then it pushed up, right? It pushed up. First it pulled back, and then we got another cross up, which would have been the winning cross up right here. And again, when the MACD line crosses the signal line strong with a gap shown like this, the further the MACD line is from the signal line, the stronger that momentum move is going to be. Now, each time you look at the histogram and the candle before it is bigger, so for example here, this candle is bigger than this one, that is also solidifying strength in that move to the upside. Now, you have to be careful because at any time the histogram could change like it did here. It went from bullish, flashed light green, which was our confirmation. Okay, we should not be looking for buys. We should be waiting. And then it actually completely turned bearish, and we got the confirmation to sell right here. And you may have taken that sell, right? Because confirmation came in, histogram got stronger in momentum. So where would you take the sell to? Obviously, if you enter here, you're going to want to take it at the closest support or stop selling at that area. So you're still able to get, a 600 point move. So you're able to find entries on the shorter time frame. I hope this was able to help you guys understanding the MACD, to understand how to utilize the MACD and histogram. And I'm going to have a second video explaining the settings that we're going to utilize as binary options traders. I'm going to create that video next and have it as two-part. So I hope you guys are excited as I am to implement the MACD in your trading strategies, and to have the MACD with the histogram as a dual threat tool in your toolbox of indicators to be able to tackle these financial markets, guys. But yeah, with that said, I'll see you guys on the next one. Bye for now.